Zillow just reported their earnings and the stock is down by 6%. Currently, the stock is at $81. 8 months ago, we made a video on Zillow when it was trading at $40 and said it would double. So today it's at $81 and it already doubled. We trimmed our position by 1/3 yesterday at $86 as the stock ran up too fast. In this video, I'll only cover the financials and the valuation. If you want to know the details of the business model, please watch our previous video. We will leave the link in the comments below. It takes a lot of time and effort to make these videos, so please consider liking this video and subscribe to the channel. In the most recent quarter, Zillow beat the revenue and met the EPS target. When we look into their income statement, they reported the total revenue growth of 17% year over year. The rental segment grew their revenue by 25% year over year. The residential segment grew by 11%. Zillow's gross margins are 76%. For the outlook for 2025, Zillow is expecting low to mid-teens revenue growth. They're also expecting positive GAAP net income for the full year of 2025. So this is great news for Zillow. Let's move on to the valuation. Before we continue, we want to clarify that this is not financial advice. We're not qualified to give financial advice. As usual, I will talk about the two cases. First, with the reasonable assumption, and the second with the great execution case for Zillow. When we do the valuation of Zillow, we separate the residential segment and the rental segment. The rental segment is growing very fast and the residential segment is growing slow. As you can see on the screen, in the reasonable assumptions case for 2024, they made $1.74 billion of revenue in the residential segment. I'm estimating 15% growth rate, 25.5% net profit margin, and 25 multiple. I'm estimating no dilution for Zillow. So the stock price for this residential would be $90 by 2029. Let's now move on to the rental valuation. I'm estimating 20% growth rate, 25.5% profit margin, and a 30 multiple. With this, the stock price for the rental would be $44 by 2029. So when I combine these two businesses, I get a total price of $134 for Zillow in 2029. So from the current price of $81, the 5-year gain is 65%. This will beat the index. Let me show you the great execution case. You can look at the assumptions on the screen. I'm estimating $188 stock price for Zillow by 2029, which represents 131% gain in 5 years, which is very attractive. But for my personal journey, I go with the reasonable assumptions case, in which I'm estimating $134 stock price by 2029. My current cost basis is $42, so it's not easy for me to average up. But since the rule is to have 100% gain in 5 years, the stock has to fall below $67 for me to add to my position. Otherwise, I would rather stay on the sidelines. Let me know your thoughts in the comments, and thank you so much for watching.